All right, so this is the third and last part of this lecture on the history of social welfare policy. And so in the second section, we just got done talking about the Social Security Act and how it was passed in 1935, and that it was a massive piece of legislation reflecting a new philosophy in terms of what the role of the federal government would be. And so let's take a close look at what that legislation entails. And so this is the Social Security Act of 1935. And the various sections that were contained in that original legislation, 11 different titles we're talking very broad in its reach in terms of the different social issues that it was addressed towards. And so Title I, we see old age assistance, a program that was created under the Social Security Act. This is the very first form of our supplemental security income system. So SSI, what we think of now as SSI, was originally old age assistance, a public assistance program, cash assistance being provided for older adults. SSI combined Titles I, it combined Title X also, aid to the needy blind. So SSI also serves blind individuals, and also what was thought of as crippled children, so kids with disabilities. Title V-B, SSI basically combined those sections back in the early 1970s to form its current structure. And then Title II, we have old age insurance. That's the very first name given to our Social Security system. And you'll notice that a survivors component was added in 1939. So it's not just OAI, but it's OASI is the acronym that we give to Social Security. And then we had the health insurance components, Medicare, Medicaid, added in the 1960s, in the mid-60s. Medicare adding an H, effectively adding an H to that OASI. And then we had some disability benefits that was added to Title II in the 1950s, which added the D component to that acronym. And so certainly we have lots of different additions and changes over the years. Title III is unemployment insurance. We still have unemployment insurance today, operated largely at the state level. And then Title IV, I'll just go through Title IV for now, but aid to dependent children, the very first name given to our welfare system. And so it's not called aid to dependent children anymore. We alluded to TANF, or Temporary Assistance for Needy Families. That's the name currently, but the original name was Aid to Dependent Children. And then we have Title V, which is getting at the child welfare system, meaning the child protective services systems that are largely operated at the state level. And so you see the scope of services and programs being offered under this piece of legislation. One way in which we categorize all the different policies or programs that were designed under the Social Security Act is to think about social insurance versus public assistance. We mentioned this in our very first lecture, but this is one way in which we can classify all the different programs. Some of the programs that we just saw, we lump into the social insurance bucket. Others we lump into the public assistance bucket. And so the section is all about what we mean by social insurance and public assistance. So you'll notice all those programs either were called an assistance program or an insurance program. So let's look a little more closely at what those terms entail. So first, just in thinking of the basic characteristics and the trends in social insurance versus public assistance programs, there are a lot of different programs contained, right? There are a lot of different programs within social insurance, within that particular classification, and within public assistance. But generally speaking, social insurance programs are much larger. And by larger, I'm talking about the number of recipients, the number of people receiving benefits under social insurance programs are much larger. The amount of money that the government, both at the federal level and the state level, that they're spending is typically larger, much larger for social insurance programs. That's one way that we distinguish the characteristics of social insurance programs and public assistance programs. In the way of trends, you'll notice that over time, social insurance payments, so if we were to report on the amount of dollars being spent on social insurance programs, typically they've increased over the years. It's just a matter of how much we increase the spending on social insurance programs. These are typically automatically adjusted. The benefits are automatically adjusted in the way of social insurance programs. So naturally, the amount of spending that we do is rising. And the spending is rising for a number of different reasons, but we'll talk about that later on. And if we're thinking about trends in the way of public assistance programs, more and more in recent decades, we've largely devolved or delegated responsibility, the federal government has, towards the state governments And another trend that we're seeing is that the public assistance payments are starting to become more under the jurisdiction of the tax system. So you'll notice, for instance, our healthcare system, our new health insurance system. If you're found without health insurance, you'll get penalized through the tax system, through the tax code. And so we're seeing more and more administration through IRS and the tax code, I think, in the way of public assistance programs. And so that's a trend that we're starting to see more and more of as we move forward. All right. So in a little more detail, we're thinking about social insurance and what that means. And so if we think about how one becomes eligible for social insurance, we alluded to this in the last lecture, but in the way of eligibility, social insurance programs are thought to be universal, I note here, but I should say that really they're universally available. It's not that everyone receives social insurance benefits, but anyone could potentially benefit from social insurance programs. That's what we mean by universal. We should really note that it's universal availability is what we're talking about here. Okay? And so as long as you've contributed into the program in question, you may become eligible for benefits under that particular program. Of course, there's lots of different social insurance programs out there. The way in which social insurance programs are funded is different from public assistance programs. Typically, they use what's called dedicated or earmarked financing. Excuse me. And what we mean by dedicated or earmarked financing is that when we assess taxes, when we assess and collect the revenue, assess taxes and collect the revenue for social insurance programs, they're going to be channeled specifically towards the program in question, right? So we call it earmarked or dedicated specifically towards the program in question. We have the Social Security tax specifically designed for Social Security. We have Medicare tax specifically earmarked or dedicated for Medicare purposes. And so we talk about the trust funds often, and that's characteristic of social insurance programs generally. And then we have a couple of other features of social insurance programs here. That is adverse selection. Not that it's characteristic of social insurance programs, but let's think for a minute about what would happen. What would happen if we left insurance up to the private market, right? Insurance for healthcare, right, or health insurance. What if we left it up to the private market, which we had largely done before the Affordable Care Act of 2010? What would happen is that you would have certain breakdowns of the structure of those programs. Namely, you might have an adverse selection issue. You might have a moral hazard issue. These are thought to be examples of ways in which the private sector breaks down in operating certain insurance programs. And so by adverse selection, what we're referring to there is an issue of enrollment. Okay, so adverse selection refers to when you have a certain type of individual who's overrepresented in the way of enrollment. And so, and typically it's the highest risk individuals. One example would be if we're thinking about the health insurance industry, the private health insurance industry, before the Affordable Care Act, you might have seen lots of people enrolling insurance who are much more sick than others. So sicker individuals tending to enroll. And so it's the highest, what we mean is we have the highest risk individuals who are enrolling in the particular insurance program. Social Security, right? You can imagine what Social Security might be like if Social Security were in fact operated not by the government but by private entities. You would probably just have individuals, older individuals and sicker individuals enrolling in Social Security. And so that's an adverse selection issue. And so social insurance is thought to overcome this adverse selection problem, right? So that's the punchline here, that social insurance is thought to overcome issues of adverse selection, that is over-enrollment by certain types of highest risk individuals. And then we have another informational problem. That's one party has more information about their circumstances than the other, right? And that's a moral hazard issue. This is not an issue of enrollment, but this is an issue of overuse of the insurance, right? So once you attain the insurance, moral hazard is where you just keep using that insurance over and over. Let's say you have car insurance, and every time you get a little, you're parallel parking and you get a ding in the back of your, on your bumper, there's a tendency to call your insurance company every single time and take up benefits. That's a moral hazard, right? And so there are protections in place with certain health insurance or insurance programs generally, right? So you have deductibles, for example, right? You have deductibles in the way of not only just car insurance, but health insurance programs as well. They would they'll implement a deductible so that you're not taking advantage, you're not overusing the health insurance. And so the basic idea here is that with social insurance programs, because of their structure, they overcome issues of adverse selection. That is, we make everyone enroll, right? Social Security, no one has a choice in the way of enrollment in Social Security. And that was one of the major changes implemented in the way of health insurance, right? So you don't have a choice about whether to enroll in health insurance. You're going to get penalized if you're not enrolled. In some, everyone must be insured. And so we've overcome issues of adverse selection and moral hazard through government-sponsored insurance is the idea. And so just a quick sum. So we know that in the way of social insurance, these are government-operated insurance programs, right? And we have a specific, that are universally available. There's a specific funding mechanism involved. There's some private sector, some economic problems that are overcome through government-sponsored insurance. And then I note here some examples of social insurance programs. Certainly Social Security, right, disability insurance, Medicare, unemployment insurance, and so forth. Right? These are all examples of government-sponsored insurance programs. So this is just a note about how policy scholars think about social insurance, whether they favor social insurance as opposed to public assistance. There are arguments that policy analysts will put forth for their preference for social insurance over public assistance in the way of designing social insurance or social welfare programs in general. That is, that there aren't these incentives, right? There isn't that conundrum, that family structure conundrum, because we're not giving greater benefits to individuals with greater numbers of kids. So there's no, it's often thought that social policy scholars will favor social insurance programs because of the right incentives in place, right? So if you're in the sandwich generation caring for kids and the elderly, right, social insurance is thought to relieve caregivers of some of the financial burden involved. So there's a lot of arguments for why analysts and scholars will prefer social insurance programs over public assistance programs, and I'm just noting a couple of them here. All right, so unlike social insurance, public assistance, there's a different eligibility. There are different eligibility requirements. There's different funding involved, and that's what we're noting here. So when we have a public assistance program, that just means that there's means testing, right? Means testing meaning that they'll check for your means or your income level, your asset level to see if you might qualify. You can't. There's a ceiling in terms of how much income and assets you're able to hold in the way of public assistance programs. And then public assistance programs are also financed differently. We typically finance our public assistance programs through general tax revenues. That is, if you file your taxes every year, or if you've seen your parents file your taxes on April 15th or by April 15th, that revenue that's being generated is being used, that general revenue is being used to finance our public assistance programs, generally speaking. And then we've made a distinction before in the way of entitlement programs, in the way of entitlement public assistance programs, and in the way of non-entitlement public assistance programs. And we give you some examples here. Entitlement programs, the biggest one here in the way of the number of recipients and such, food stamps, right? We spend a lot of federal dollars and state dollars also on food stamp or the SNAP program. Medicaid is the large one. SSI, relatively speaking, is smaller compared to the other two. And then we have some examples of non-entitlement programs here. Most notably, TANF, our welfare program, is actually a non-entitlement. It's time limited, and there are certain work requirements attached. We'll talk more about it as we go along. Section 8, or the housing voucher program, as it's more formally stated, these are examples of non-entitlements. There's no obligation on the part of government to provide you with assistance, even if you're found to be eligible, is what we mean by a non-entitlement. All right, so that concludes this lecture on the history of social welfare policy and how we think about classifying the classification scheme that we use for our purposes in the way of public assistance versus social insurance programs. And so next week, we'll pick up the economic and political context, sort of fusing those together and thinking about the fiscal context. And so we'll look at taxes, and we'll look at the earned income tax credit, and that'll be for next week.